Hello, Ed. Today is Monday, the 26th of March, 2012. This chart is the 10-year Greece bond yield, a quarterly chart. Each one of these candles representing that of 3 months worth of data. So for the last 2.5 years from this bottom of 444, there's been a lot of volatility within this, and I think it's probably safe for me to point out that I'm by no means a bond expert. In fact, I'm so much not a bond expert that I'm thinking this is the yield in percentage terms, meaning currently we're at around 20%. It was not that long ago, on the 7th of March, it was closing in on 44, and just a few days ago, we seen it go down to 17 3/4, back up to 20. Now, I've heard through the grapevine, don't know how true this is, sarcastically laughing because I kind of do know, but that is when the rates get extremely high and out of control kind of deal, then this is usually reserved for companies that are pretty much on the brink of blank. I'll let you fill in the blanks. And it's not usually a pretty thing. And I guess the same thing could be made for countries. It's just more common for, I guess, a lot of company bonds that are extremely risky to be in this type of environment. But the movement on the 7th of March apparently is going to go up to 43.92. I'm using forexpros.com for this level, and the same site states that it came down to 17.75 just about a week or so ago. Now, the low of 444, this is from another web page, and it looks like a weekly clothesline chart, and I don't know what the lowest number was. However, if we take the trusty little calculator and we take the high of 43.92 and divide this by the low, which we'll say is 444, although it's probably lower than that, and put this up to the power of 61.8%, which is the phi ratio, and multiply it again by the low, which gives us a 38.2% retracement price subjective to 1830, which means that a small cut below right in here pretty much hit. And if this was 410, exactly, if the low was 410, then that would have been a perfect Fibonacci hit as far as where the levels of support come into play. Now, on the 12th of March, 2012, that was a Monday. That was the date of this whole Greek news about the bailouts or whatever it is that they did. Again, not an expert, nor do I really care too much. It's just that it's got to be important, which is why I'm making this particular video. But the move pretty much went from exactly 40 down to 18 over the weekend. A huge spike lower. I guess they did something with their papers and rule books, or they did something to make it so it's not quite as risky as it was just a few weeks ago. I don't know what opinion I can give. To me, I know that we're coming close. I don't know how close to the days of the fiat currency explosion coming into play. And if this has any relevance towards it, bonds to currencies, I'd have to say with an educated guess that the answer is probably yes. But this is the chart. This is the wild volatility. And this all begun about 2.5 years ago at the end of 2009. That's when this all begun, with these big moves, 3 up candle, little small consolidation, but making it back to this previous range, just something going like this. That's all that pattern is, because when you have a movement up and you see this line, that means you went down, and obviously it came back and it just kept on exploding with a big green candle, big green candle, big green candle. And It got all the way up to 44. That wasn't that long ago that Greece was burning. There was a lot of big riots going on there. And that's why I decided to basically put this quick little video. I have no idea on how to play these things, nor would I even be interested in doing so. But again, this is a chart, and I'd like to thank you for tuning in to this fairly quick video. Bye-bye.